Good morning. Welcome to CupO'Forex. This is David Frank with your daily video analysis for Tuesday, the 18th of November. Let's get started as we do have some things to talk about this morning. Already released for today, the Reserve Bank of Australia released its minutes from its last meeting. And we could tell that they have some concerns about the strength of the Aussie dollar, as well as the housing market and some and the labor market concerns. Nothing too big there released. Also, just released, more importantly, housing price index out of China, as well as the foreign direct investment. This kind of spooked investors, and we've been seeing a lot of mixed and choppy trading, especially coming out of the mainland shares like the Shanghai Stock Exchange. Now, housing price index contracted larger than expected. It came out at minus 2.6%. We also saw a contraction in the foreign direct investment, the FDI, minus 1.2%. Is China's economic growth slowing? Yes. Should we be panicking? No. 7.5% year-on-year growth is pretty good for any economy, and I don't think we should be panicking and saying we shouldn't be buying shares on the Shanghai Stock Exchange or Bangkok or whatever. I'm not too concerned about these numbers slowing. Maybe they're slowing for a good reason because China has been growing at double-digit growth for the last decade, 2 decades. Okay. Also coming out today in the next 4 hours at around 8:30 GMT time, Reserve Bank of Australia, their governor will be giving a speech. We'll be listening to him at Q's about how he really feels about the Australian dollar and whether or not they're going to be doing any changes to interest rates over the next month or so. Also coming out today out of Great Britain, the consumer price index year on year and the core consumer price index. We're expecting these numbers to come in and meet expectations. First one, the year on year CPI at 1.3%, and the core consumer price index at 1.6%. We also have coming out today out of Germany the ZEW numbers. Their surveys, economic sentiment, current situation will be released today. The big thing that we'll be watching is the economic sentiment. This really missed expectations last month and contracted minus 3.6. We expect that number to print at a benign 0.5. We're looking for any cues to see if Germany is slowing down, and that takes care of the really big data coming out today. We will be watching to some a bit the NAHB housing market index coming out of the United States. We're expecting that to print at 55, as I think builders and contractors are fairly confident with the direction of the U.S. housing market as that starts to pick up steam. That's released at 3 p.m. GMT time. Let's get started with some technical analysis. I got some things I want to look at today. First up is the euro dollar. I've been watching this currency pair very keenly since we failed at the 55-day moving average here, and we've been moving lower ever since. Quite frankly, I think traders need something strong coming out of Mario Draghi, the European Central Bank, to really support the euro dollar at this point. I have not been, think that the euro dollar has been strong for a while now, even after we found a bit of a floor down there, 1.2350, and we moved higher. And we did recover for a short time back above a key technical level, 1.2500. Then we failed at a key pivot of 1.2850. Just under that, you can see the bearish hammer candlestick forming, and we're back below 1.25. This is an indication I think we're not done falling, and we haven't really found a bottom yet. And let's watch this currency pair closely. I'm keeping my short trade open and going to see how much downside I can capture. Also, I want to take a look at the New Zealand dollar, US dollar, my favorite Kiwi currency pair. Love calling it the Kiwi. We have a key technical support at 0.77. We have a key resistance level at 0.800. And as you can see, we are mired in a sideways trading pattern between these two technical levels, and I think that's where we're going to stay for quite some time. So take advantage as we go up to 0.800. Selling at that point and buying as we hit the technical support. As you can see, we failed again. The hammer candlestick moving lower. So now we're going to start moving lower a little bit. I also want to take a look at ExxonMobil today. I like watching ExxonMobil since it likes to follow the price of oil, and oil has certainly been falling. And we have $70 a barrel roll with an outside. I did a bit of a analysis piece on oil a couple weeks ago. That 70 was definitely in our targets, and it looks like we are moving in that direction. And as oil moves lower, so will big oil producers like ExxonMobil. As you can see here, it's been following the black gold. And when the black gold recovered a little bit, we saw it recover. Very interesting, which just formed right here. You can see a head and shoulders is indicative of another bearish move, and that came just below a technical resistance level of 96.65, and we since moved lower again. Let's watch this a little bit on the close side. That takes care of our technical analysis for today. As always, we'll talk to you again tomorrow, and have a wonderful day trading.